Video you just witnessed was the authorities in China raiding Evergrande's headquarters, and that video surfaced earlier this week. And if you haven't heard the name Evergrande in the past week and you have no idea what the significance, what the relevance is, and how this could impact the global economic markets, then this is the perfect video for you. We'll be going, what is Evergrande, what's going on, and who and how will it affect what's going on in the world. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. If you haven't been here before, definitely a huge favor, a huge ask. If you learned something new, hit that like button for me. And if you haven't already, please hit that subscribe button and turn that notification bell on. I would definitely appreciate that. So Evergrande, what is it? How will it affect me? Why is this a potential concern for the markets throughout the world? Well, looking at this CNBC article here, we see it is a developer and it is on the brink of default. Here's why it matters. So we see here that obviously China has had a run in the real estate for a while, and Evergrande has benefited from it, and it is on the brink of collapse today. So the analysts here warn the potential fallout could have far-reaching implications that spill outside China's borders. Evergrande's collapse would be the biggest test China's financial system has faced in years, says Mark Williams here. Now, how did we get here? Well, first things first, how much debt are they struggling to pay? That number is $300 billion. Obviously, huge property developer. I believe they are the second largest in China, and obviously the population growth has kind of led to their success. So they have been warning investors that they'd be likely to default on debts, and they've been struggling to not only pay suppliers, but pay these bonds that they've issued to banks and a multitude of people throughout the world. So we see here that banks have also responded to deteriorating cash flow. Some in Hong Kong, including HSBC and Standard Chartered, have declined to extend new loans to buyers of two uncompleted Evergrande residential projects. So now the projects that are still in process and haven't been finished are not getting funded. Rating agencies have obviously in turn downgraded the firm, citing liquidity problems. And we can see here that the stock is down nearly 80% this year so far. So it's definitely been a rough year here for Evergrande. But what does this mean? This kind of has a remnants of the 08-09 housing crisis that the U.S. faced and the Lehman Brothers. It was just the anniversary, I believe, last week of when they decided to close the doors. So it's kind of, that was the trigger event that kind of caused people to start opening balance sheets, looking at financial statements and realizing how much trouble was actually out there. They had just, had this amazing bull run. Housing was running amazing, kind of reminiscent to the past couple years. Obviously, China's real estate's been doing well. But yeah, let's learn a little bit more about Evergrande. So Evergrande is everywhere. Main business, real estate. Second largest property developer by sales. 1,300 real estate projects, over 280 cities. Property services management arm is nearly involved in 2,800 projects in 310 cities. Company has 7 units dabbling in a wide range of industries, including EV, healthcare, consumer video, and TV. The firm says it employs 200,000 people, but indirectly creates more than 3.8 million jobs, according to the website. And, who will be affected? So obviously widespread in terms of all of the different cities that they operate in, but also in the arm's reach of 3.8 million jobs. So that would be a huge hit to the economy. And obviously we wouldn't want to see that. But who else will be affected? So we see the banks here, suppliers, home buyers, and investors. Let's start with the banks. The banks are the ones that normally issue out the money in terms of bonds or for loans, etc. And they would be up among the first to be hit if there is any contagion effects in the wider property sector in China. A banking failure triggered by the collapse of major property developers was the single most likely scenario that would lead to a hard landing. So this is also known to be, investors throughout the world. China, it's a little bit more of a riskier asset in a investment manager or in a bank's portfolio. So it does garnish a little bit more of a higher interest, high risk, high reward. Well, that's kind of not paying off at this instance, but basically there's banks around the world that have funded many projects. So it's not like it's just a couple banks in China, your HSBCs or other ones. It's actually got a global impact there. Home buyers and investors, much like the video I showed you with the police raiding, there's actually been known to be angry home buyers and investors that showed up to the headquarters there and demanding repayment of loans on overdue financial products. So apparently it's chaotic scenes. And that is absolutely crazy that you have people showing up and, protesting. Obviously, if anybody put a deposit or if anybody made some type of investment on this, property so far, then obviously that would be gone and that would hurt a lot of people. But the next thing is the suppliers. Anybody that's been working on the house so far, kind of been in projects or has any outstanding fees, well, they're definitely going to be hit as well. In August, S&P estimated that over the next 12 months, Evergrande will have over 240 billion yuan, which is 37 billion US, of bills and trade payables from the contractors to settle. So $38 billion alone just in paying the suppliers for building, labor, supplies, etc. So that's absolutely crazy. Now, is Evergrande too big to fail? It's such an important real estate developer, and it would be a strong signal if anything happened to it on the global stage about like people questioning, what is China's economy really like? Is there more concerns here? Is this a bigger red flag? Should we be diving deeper into this? And I think that a lot of people do think that this is signaling, at least on the early outset, that there is bigger problems here. Now, this does get into an interesting situation because if what we're bringing into or what we're going into now is obviously during the financial crisis, the US government stepped in and helped out a lot of banks. And they gave them essentially free money or whatever deals that they negotiated. Now, is the Chinese government going to go and take the same stance? Are they going to go and cut them a $300 billion check? Or are they just going to let them fail? Now, that is the biggest question right now, especially since all of the other controversy that's going in, whether it's the education, the e-commerce, all of the other harsh regulations that they've slapped down on the Alibabas and the Tencents. It'll be, I know everybody's waited with a bated breath to see what the Chinese government is going to do. So definitely stay tuned on this topic. It's definitely something that I am watching, but I hope you enjoyed the video. Let me know down below, is this something that's going to set off a next stage of kind of bankruptcies like we saw 10, 11, 12 years back, or is this just a one-off event and we'll be done? I hope you enjoyed the video. I hope you all have a great week in the markets. Happy trading.